Good afternoon, everybody, and welcome to today's session on payroll, preparing for 26. I'm Johnny Ridd, founder CEO at RQ, the host for this webinar. And for those new to us, RQ is a next generation referral management ecosystem. Too often, referrals are managed with spreadsheets, emails, manual processes, and that means opportunities to add value to clients by referring them or directing them to valuable vendors like Husky are missed, and compliance risks creep in. RQ changes that. We automate, streamline referral management so that firms like yours can collaborate more efficiently, securely, and with complete visibility. And today, more than 1,000 firms use the RQ referral platform, and on average, they're seeing a 25% increase in the referral volume between partners, which means ultimately happier clients. You can start collaborating with today's host of this webinar, Husky, by clicking on the Join RQ link on screen now. Alternatively, you can schedule a conversation with Husky to find out about how they can add value to your clients and support them. If I briefly introduce our panelists, first, Adam Flight, of Moore Kingston Smith. Adam is the Director of Payroll and HR Consultancy Services at Moore Kingston Smith. He's over 20 years experience, and for the last 7 has been heading up Moore Kingston Smith Payroll Bureau, and over the last 18 months has been leading the MKS HR Consultancy team. The MKS Payroll Bureau has grown during Adam's time from a team of 30 managing around 700 clients to a team of more than 40 managing more than 1,500 clients, and the process between 30 and 40 pay slips per month. And Brendan Shanks. Brendan is the founder of Husky Workplace Pensions and Savings. He's over 20 years experience in banking and financial services, holding senior positions at ING, Credit Agricole, prior to founding Husky. And Husky helps employers and accountants connect payroll and pension systems seamlessly so companies and employees have more now and more later. And crucially, automation and compliance tools cut admin for the businesses while employees gain better value and long-term financial outcomes through smarter streamlined pensions. And Olga Sala, who is Husky's COO, over 15 years experience in technology and product leadership, including roles at AXA Assistance and Diligent. And Olga will be in the background during the session today and help to cover any specific questions as needed. Those are quite lengthy introductions to you all, but thank you very much for joining us. The format of this session is going to be very much discursive. It's going to be Brendan talking to Adam about some of the upcoming challenges and some of the opportunities for payroll managers as we head into the new year, and potentially we'll touch on some of the upcoming potential legislative changes. But without further ado, I'll stop talking and Brendan, hand over to you.
Great, thanks, Johnny. I'm not sure I could have introduced myself as well as that, so thank you. Great to be on, and yeah, thank you for RQ for asking us along today. And Adam, thank you for coming on board as one of our best clients, and delighted that you've joined. So yeah, without further ado, I'll plow on with the questions. So there you were, 7 years ago, fresh-faced Adam Flight, coming from a HR background to run a pretty sizable payroll business, payroll bureau, and outsourced HR function as well. At that point, what was your biggest concerns coming in, and maybe your biggest priority?
Biggest concerns initially were I'm not a technical payroller, so running a bureau of the size that it was at the time was certainly quite a daunting challenge, but one that I was up for. And it was really understanding the team's pain points with regards to processing sort of payrolls, where a lot of time is taken and where efficiencies could be created without necessarily overhauling huge process procedural change, which, as we know, sort of teams can be sort of a bit against and certainly push against. And so it was one of your colleagues 7 years ago that contacted me, asked to sort of come in for a meeting to discuss. and had the meeting, and I sort of came away from it thinking this sounds almost too good to be true. Where's the catch? Because from my point of view, I know that the team are providing pension uploads for sort of probably close to about 20 different sort of pension providers, all in different formats, different platforms, and sometimes it was taking 10-15 minutes to sort of produce the file and upload. Sometimes it was taking upwards of sort of 30-45 minutes. So I saw an opportunity sort of with Husky to potentially streamline and create efficiencies within the team.
Yeah, no, that's kind of good to hear. And I guess like we've worked together now for a while, so can you recall some of the time differences, or from say when you came in and you were doing like whatever it took on pensions, kind of administration and pension queries, to sort of today?
Yeah, so if we were to take an average sort of across the board of pension providers that we do uploads for, we now have more than 200 of our clients sort of signed up sort of with Husky via referral from ourselves. So there's still plenty of room for growth. And a lot of those sign-ups are initial PAYE registrations, new payroll schemes that need to set up and have an obligation to set up a workplace pension. The pension world is quite highly regulated. We're certainly not pension advisors. And so it was really looking for something to sort of bridge that gap that we could offer our clients that actually took the onus away from us. So we didn't have to worry sort of too much about sort of keeping the client compliant ourselves, but offering a value add service that sort of does everything sort of it needs, from the setup, from the communications, from the sort of audit trail and everything else, as well as keeping up to date sort of with legislation, as we'll sort of touch on sort of a bit later on sort of during this discussion. And so when I look back at the amount of time the team was spending on those 200 clients compared to now, I would probably say that we're saving 50% of the time that we were spending sort of back then, sort of seven years ago. Because with the Husky platform, it's a standard one file format that we use star, which I know a lot of bureaus use, but effectively it's a simple PAPDIS file that can be uploaded into the Husky platform, and then you guys sort of take care of the rest with regards to making sure that sort of starters are added, leavers are taken off, that the reconciliation between the contributions, what they should be and what they actually are, sort of match. And for me, it's a bit of a no-brainer. It's sort of a one file upload, and you look after everything else for the client.
Yeah, that's good to hear on the 50%. That, we tend to talk to bureaus and we kind of landed on a figure of around 30%. So I think there is a lot more efficiency in payroll software today, but there were these kind of clear gaps for us that we could kind of see around, particularly around the, kind of automated regulatory document storage. I think that just gets missed off when a lot of the time by employers, and there's this sort of void. I think, we guys come into our business and kind of has really come back to these messages of time saving and expertise support at the kind of, immediate access. Might be interesting to get your take on that, because I know the conversations we have a lot of time with Bureau is, we might spend an hour waiting to be picked up, say, by Nest on a call, on a query about a contribution file.
At the end of the day, Husky have a team of people in the background that sort of are contactable really, really quickly. If there are any sort of queries, either from the client direct, because the clients sign up with you guys direct, as well as sort of us as the intermediary that sort of does the file upload. So to have people at the other end of the phone or an email that can look into things quickly, understand how things should look for that specific client and that specific pension provider, really does sort of give myself and the team sort of peace of mind that sort of the client is being sort of looked after and serviced correctly. And as you guys know, sort of employers, whilst they know there's an obligation to set up a workplace pension, very few of them sort of know what they actually need to do and what the options are sort of out there for them. As you and I both know, over the last few years, trying to get clients to sign up to salary sacrifice and get them to understand how easy it is to set up a separate scheme, what can be done with the savings, how it affects the employee's net pay. It's the biggest no-brainer to sort of for me, and it is probably one of the hardest things to try and get employers to convert from a standard auto-enrollment scheme to salary sacrifice. And it's not just understanding the savings with employers' national insurance going up from 13.8 to 15%, the savings that the employers can make by the reduced taxable pay sort of element. But also, as you mentioned, it's the process in the background. A lot of employers, when they implement salary sacrifice, they don't realise that there's a contractual HR point that always needs to be sort of ticked, in that if someone's sacrificing their salary, they're effectively giving that up. And that does often mean that unless you've got a technology platform such as yourselves, that addendums to contract or new contracts need to be issued to show that reduction in salary. The beauty of the Husky platform is that the employees consent sort of via the app to that reduction sort of in salary, so that sort of from the employer's point of view, if they ever have an audit or a compliance check or anything else like that, and they get questioned, right, well, show us where your employees agreed to sacrifice a certain amount of their salary, they can be provided with an audit trail and a report showing exactly who signed up when, and sort of understanding the implications to them regarding their pension provision.
Yeah, no, it's interesting, and we're going to touch a little bit on the budget in a bit. But with Rachel Reeves's kind of change and bringing in this cap, it's really interesting that now it's really highlighting the benefit of salary exchanging in a way that's never been done before, I think. And it was one of your colleagues, because we've always struggled with communicating the language around it, because exchange or sacrifice, they sound terrible things. Like, I don't want to sacrifice an arm, but. It was funny. Tina, I think it was, he said, "Yeah, do you realize you're just paying too much national insurance on your pension contribution?" And sort of, I thought that captured it really well. So yeah, no, I think it's really kind of it really is, and we see pretty much 95% of employers with say 1 to 50 employees just don't do it because they've come to pensions with this kind of this regulatory requirement to implement a pension plan, and you've got things like qualifying earnings or pensionable pay sets, and it makes it difficult to actually implement. And you sort of think, well, I'm done with it. It's too much hassle. But we just see it all the time. It's the biggest missing free money for employer and employee there is. But going back again, because I think we get asked this a lot by payroll bureaus, or we're trying to present this, I guess. When you kind of, I guess, were looking for the solution, because clearly you had this HR background as well, which I think really helped us to develop in the way we have. But when you were looking to sort of de-risk MKS's payroll bureau, what were your kind of key, I guess, USPs, or what were you looking for that you felt you're going to need if you're going to bring something in? What would that need to look like?
Yeah, I think it's the communications and compliance piece of the two sort of key areas. With the payroll software we use, it does have an auto-enrollment module where you can do communications to employees and things. It's something that before I started, when they adopted the system, they decided not to use. I still stand by sort of that decision, sort of not to use it, because why should we as payrollers be getting sort of involved in pension communications when it's not really our area of specialty? Yes, the communications are relatively straightforward and simple, but as long as the employers have got good starter packs and contracts of employment for their people when they join, generally once we upload joiners and leavers into a pension sort of platform, the pension providers have got so much slicker now in sending out new joiner packs and leaver packs as to what they can do with their portfolio when they change jobs and potentially transfer it into another fund or with another provider. But also when someone enrolls, making sure that they have the relevant forms to opt out, and also sort of what they can actually do with their portfolio dependent on the level of risk that they want their money sort of invested into. So for me, it was always a case of, well, how do we make that journey so much easier for employers? If they came to us to ask us to set up a pension scheme, we're not pension advisors. We can't say, well, you should go with this scheme, you should go with that scheme. We also don't know enough about all of the different schemes as to which ones would sign up employers of a certain size. We don't know the level of fees, the sort of admin fees and things that the pension provider sort of offers. And also you have so many different sort of scheme types, whether it be sort of a relief at source, net of base rate, sort of salary sacrifice, all of those sort of different types, that it was one of those things I said, I don't want the team to have to be at that critical point where clients are asking questions and they may be unsure of the question, being asked, and also the answer that they need to give. And so looking at what Husky are able to provide with regards to sort of FAQs for clients, how quick the onboarding of clients sort of is once we've done that initial referral, and with regards to new PAYE schemes that we set up, and we probably set up a good handful of those type of schemes on a monthly basis. I would say easily 90% of clients sign up sort of with Husky, because the way that we price sort of our payroll model, and the cost of us solely sort of doing the upload into a standalone pension portal compared to the speed and efficiency of us uploading it into Husky, in addition to the Husky cost, when you add that reduced fee plus the Husky cost, it still is a saving to the employer. So there are a number of different areas that for us, it's a no-brainer. We have a one-pager as part of our proposal document that we send out as standard to sort of all clients, so that they are aware of sort of Husky, what the pricing sort of is, and obviously the USPs of yourself and what you can provide them. And that's why we have such a sort of high sign-up rate sort of with clients that we onboard.
Yeah, do you bring in our reduced pricing scheme into that conversation? You know, that I think it's one of the most successful things we did early was, you know, to go to pension providers and say, look, we're going to bring you perfectly assessed clients with perfect data straight into your systems. You have no acquisition costs, so reduce your price. And everyone, surprisingly so for me, in financial services, which said, yeah, we get it. That's great. Just bring us free clients. That's fantastic. Except obviously Nest just running one price. So how do you tend to present that?
We don't necessarily present that specifically around the pension provider sort of pricing. It's more around sort of the admin time that we would have taken if we were to sort of produce a standard file for Standard Life or Aviva or Royal London, and the rigmarole of at one stage Standard Life having 3 or 4 legacy systems requiring 3 or 4 different file templates. For us, it's being able to offer a reduced sort of fee for us doing the pension upload, because the upload into the Husky portal is so much slicker and quicker than going via a normal pension provider. And then when you add on sort of the cost that you charge sort of the clients, when you add those two together, it still comes in at less than what we would charge if we were doing just a straight upload into Standard Life, Aviva, and the others.
And are you also mentioning salary sacrifice in that, or do you even leave that out?
I often mention salary sacrifice as part of the initial conversation when having calls with prospects, because that's the best time to be actually trying to get them to understand from the get-go actually, if you're a small employer and you don't have a lot of money to offer other benefits like private medical and company cars and sort of anything else like that, actually, you can set up a salary sacrifice scheme. And for the last couple of years, a lot of clients have been setting up a default salary sacrifice scheme so that all employees are automatically enrolled into that pension. And whilst employers seem to be very sort of slow on the uptake and understand it, actually, as an employer, if you were sort of advertising a role and as a list of benefits as a small startup, you say, we offer a salary sacrifice pension scheme, a lot of employees actually do get it and do understand it and go, wow, actually, I'm going to maintain the same level of contributions that I would have done previously, but actually I'm going to end up with higher net pay, as well as then seeing how much of the employer savings are then transferred sort of into their pot, which, as you know, could be zero, could be 100%. But I would like to think that the majority of clients pass on as much of the savings as possible to the employee. Then again, it's such a zero cost benefit to have that actually it could attract the right sort of candidates, because pensions are so big in the news, certainly over the sort of last couple of years. And I think certainly the generation sort of leaving university, entering into the workplace now are thinking, right, okay, is the state pension at some stage going to be reduced, or is it going to be increased that actually I'm going to have to work till 75 in order to get it, and what's it going to look like? That actually they're being a lot more savvy now about sort of pension savings compared to certainly when I entered the employment market sort of 25 years ago. That actually it's, from my point of view, it is a no-brainer, and it is a really, really nice benefit to be able to offer as potentially a small employer or a new startup.
Yeah, absolutely. So one of the areas I think obviously we're looking at the moment is sort of accessible savings, workplace savings, and actually recently accepted onto JP Morgan's FinTech Forward program to build and promote this, because there's basically post the kind of cost of living crisis, there is no savings, I guess, post COVID too. 1 in 2 UK households cannot afford an unexpected £300 bill. And if you haven't implemented salary sacrifice on an average earner on their existing pension contribution under the auto enrollment legislation, that will create £152 a year, for 2 adults, that's your £300. But as a payroll bureau, does workplace savings sort of strike fear in your heart in terms of administration?
It certainly doesn't strike fear in my heart as much as earned wage access does, which I know a lot of my colleagues sort of within the sector, there is a very mixed view on how that potentially works and how the software works. For me, as long as there is a really clear, defined process as to sort of what's required from payroll bureaus, what's required from employers, and communications are clear with the employee, so that pre having a salary sacrifice pension, this was your net pay. Post having a salary sacrifice, your net pay is going to increase by, let's say, £150 a year. Actually, would you like that £150, so about £12 a month or whatever, put into a savings scheme? As long as that is made clear and it is easy and pain-free, sort of as the current process for sort of just doing simple pension uploads into the Husky platform is, then I don't see why there wouldn't be an issue. Because for me, there has been some sort of big stories in the press around Iceland and a few others that sort of had those Christmas savings clubs and everything else. But obviously they had the issue because a lot of their staff were sort of on national minimum wage. And then even though the employees had gone into things with their eyes open and wanted to sign up for a savings scheme so that come Christmas they've got £200-300 to spend on their family's Christmas shopping or whatever it sort of may be, because it then took them below national minimum wage, it then caused massive sort of issues. I believe that HMRC may at some stage be re-looking at salary sacrifice and those at sort of the lower end of the earnings sort of scale to see whether something sort of can be done so that they're not necessarily losing out. But the savings between pre and post salary sacrifice completely sort of takes that sort of out of the way, because obviously salary sacrifice people at the lower end can't sign up to that anyway because it would take them down. So the fact that you don't have to be overly sort of concerned about sort of national minimum wage breaches, and you are just putting the savings that they are saving post sacrifice into a scheme that they can then access once a year, or they can build it over 3 or 4 years. So like you say, their car dies, their washing machine goes, or whatever else, and they need to spend out sort of £300 to £500, even if they can then withdraw that money to fund part of that sort of cost or anything else, will be a huge plus to people. And yeah, I see it as a positive. It just depends on the process for setting it up and administering it.
Yeah, exactly. And that's exactly what we've addressed, that, you know, you're not as an employer going out there setting up 10,000 bank accounts for individual employees, you know, it's just mad. But it is just effectively one payment to that, you know, bank or savings institution. But it does to I think where you were going on the point there. I've spoken to the Pensions Policy Institute about it, and, you know, they're very clear that they advise government on policy, and they're suggesting this needs to be brought in just because of this dreadful lack of savings now. So I think it's coming, and therefore going to be a headache for payrollers, I think, unless you're using an efficient system that has all those checks and balances, which is hopefully what we'll have very shortly. So yeah, going back, I guess, and on to the budget. Obviously, we've had all this chat from Rachel Reeves leading up to it, and then announced. And there's various things in there, I think, for payrollers. How do you deal with that type of, you know, action by the government? So changes in legislation, you've got to sort of implement them, whether it's next April or whenever. How do you kind of look at that and manage that as a payroller?
So we work with a couple of sort of payroll specific training providers that sort of keep up to date sort of with policy changes as well as with the CIPP, and just make sure that sort of the team are aware of what the changes mean for clients, so that if they're questioned, they can answer relatively high level sort of questions on it without getting sort of too much into the detail. But it's also working with the payroll software providers as well. We obviously use an Iris owned software. There are several out there at the moment who are sort of getting close to sort of disrupting the market sort of with Iris. And I would like to think that they are going to be keeping a very, very close eye on things there, so that their developers in the background can work on something, so that those payrollers within the bureau environment, or even sort of in-house, don't have to be overly concerned about the calculations, the checks, the balances, the caps that potentially could be put in place. And hopefully, between both the payroll systems and software and platforms such as yourselves, there will be things to flag when certain caps have been sort of hit, so that the onus isn't on the payrollers themselves to check line by line how much someone has contributed into a pension and reach that limit before then sort of national insurance or whatever else is then sort of applied to pension contributions over a certain level. Being a skeptical guy as well, they've mentioned that for sort of 2 or 3 years' time. Who knows? A lot can change within 2 or 3 years within the political sort of environment, sort of in any country, let alone the UK. So dependent on sort of what happens, that could be reversed out if something were to change. But if not, we've got a number of years to work with the likes of the CIPP, with the Payroll Centre, sort of, and others, as well as the software providers, to make sure that everyone is aware of the implications and what we need to be doing, and whose obligation it is to sort of communicate that to clients.
Yeah, I think there's a little slightly wishful thinking there about some of the payroll softwares, but I take your point. But that's certainly, I mean, I go back to 2016 when SMEs started to have to deal with pensions and implement a pension scheme. How much was missing then, and I still feel that really is still the case with salary sacrifice and minimum wage and some of the rules required there. So I think it is going to be interesting. But yeah, who knows what ends up happening with Rachel Reeves? Is there any other part of the budget you think is relevant? Obviously, they haven't changed. The higher earnings brackets. But would there be anything that you guys feel you need to kind of look out for or train up for?
No, not at the moment. It's the standard annual sort of minimum wage increases. So sort of doing minimum wage audits as standard sort of towards sort of year end, and how that looks like sort of in April, just forms part of that process for us. And I'd like to think that sort of with technology developing at a faster pace in the last sort of 2 or 3 years than probably the last 10 years, who knows sort of what the future sort of holds there. I know that a lot of bureaus have introduced automation sort of within that. There are software providers that are now integrating integration within that, within their piece, as well as sort of APIs that can then link into portals such as yourselves, taking data straight out of HR systems, pushing it into finance systems. And I'm really, really excited and interested to see where systems sort of do go, because I think it will be down to the software providers to keep at that sharp edge of the changes within payroll, because the legislation, if you see the number of legislative changes within payroll within the last 15 years, there have been more changes within the last 15 years probably than compared to the 80 years leading up to that. And I think it's only going to get more and more complex. I was on a prospect call yesterday with a financial consultant who was working with a school, and she's only been in there 6 weeks, and she went in there going, I can't believe that people are still doing payroll in-house, because of the complexities, because of the changes and keeping up to date, let alone worrying about sort of if someone to be struck down sort of ill or anything else, and business continuity and software costs and sort of everything else. And sort of from a final point, from my point of view, I think pensions is probably one of the most complex areas sort of within payroll. From payrolls that we take on either from in-house or from other providers, at least 30% of those have issues with how the pension has been set up and calculated on the payroll. And I think that with this introduction to the potential sort of cap and any other pension changes, it's only going to become more and more complex. And that's where bureaus are going to rely on keeping up to date, either with their systems, with their training, but at the same time, how are clients going to keep up to date with the changes to make sure that they remain compliant? So it doesn't matter whether it's referrals via a bureau or clients coming to yourselves direct, just that peace of mind knowing that that compliance piece has been sort of checked, just gives everyone sort of peace of mind that sort of if an audit were to be done, no one's going to fall foul of pension contributions, pension funding and everything else, in the same way that certain sort of large news articles have hit where pension funds have dried up and sort of can't pay out. And hundreds of millions of pounds have been lost. So I know that that's on a much larger scale, but even so, sort of a pension pot of pension fund not being compliant and not being there for smaller employers is probably even more critical.
Yeah, and I'd reiterate, I think it's quite interesting. We're discussing this with one of the very large pension providers that I think now that Rachel Reeves has put this £2,000 cap, into 2029. They're sort of now thinking about how we message the member to say, well, you should be taking this up and we can help you with that. And so I think it's going to become much more the landscape that small employers will implement salary sacrifice because there's I think clearer defined benefit. Anyway, I can see the time, Johnny, and I can see you getting agitated there with our chatter.
I'm not remotely getting anxious. I thought it might be helpful to because a lot of people on this call, Adam, will be accountants running bureaus themselves. It might just be helpful to take a step back for those who've never heard of Husky, just to situate what the alternatives are if you're not using a platform like Husky.
Yeah.
And then I'd be quite keen to just press you on the saving point, or the sort of time saving point from your side, and if you were pushed to quantify that and how that really breaks down, and where you're removing duplication of process. Perhaps if you wouldn't just mind, just high level, what Husky does, what the alternative is.
So the alternatives for sort of employers, particularly sort of knowing that there are accountants and bureaus on here, is that the obligation is on the employer at the end of the day to ensure that they have a workplace pension scheme sort of in place. And I'm sure that if we did a poll of people on this call sort of today that set up new PAYE schemes for clients, how long it takes to get that pension information. I mean, some members of my team who look after onboarding, I think the longest we've ever waited for pension information is close to sort of 2 years. And the employer is well aware that they then have to pay 2 years worth of backdated contributions. That's a very extreme sort of version. But I think it is because, one, it's an apathy point, and two, it's a lack of understanding point as to why they drag their heels and they don't know what pensions are best for them. And so more often than not, they'll just go, I just want to set up a simple nest pension, which, yes, it does what it says on the tin. But is it right for the business and the employees? And sort of for us, when we were sort of talking sort of with Husky, when we introduced Husky, other than waiting for PAYE references in order to finalise the pension setup, more often than not, once we've done the introduction to Husky have had that conversation, the employer has picked the pension, and they're well underway to sort of be setting up that scheme before we've even got the information to run the first payroll for that client. So for me, it just means that, one, I know that sort of the information that the client's being given is current, is up to date, and they are going to be well looked after. And it also means that once the pension has been set up, we are being given the correct information by Husky as to how it should be set up and run on the payroll system. I'm sure many people will sort of attest to going to clients to say, can you give us your scheme rules? And they go, oh yeah, we've set up a salary sacrifice scheme. This is that. And then a year or two later, they may come across something and they go, oh, hold on a second. I thought you said you'd set up a salary sacrifice. Well, yeah, we have. Well, no, it's a tax relief at source scheme that you've set up. So not only have we been sacrificing the salary and your employees getting national insurance savings, but actually your pension provider's then been adding 20% sort of tax relief on top. Oh, I didn't realise I needed to set up a separate salary sacrifice scheme in addition to the auto-enrolment one. So it's just things like that just for us make sure that we're setting up sort of the pensions correctly, and we then don't have to sort of spend sort of hours going back historically correcting sort of pension contributions and settings. And as I said, sort of the piece of us not having to set up, not having to do the communications, even though we've never done it, if we were doing it, it's a time saving, but realistically it comes down to the ease of producing one pension file, uploading it onto the Husky platform compared to having to produce multiple different files dependent on the pension provider, and then the ease of access to actually get into that portal to do the uploads itself.
Yeah, and I would just add as well, I should potentially disclose a conflict of interest. That we ourselves are Husky clients at RQ, and I would definitely reiterate what you said earlier, Adam, which is it is a very helpful mechanism for rewarding staff and attracting talent. Like, you know, pension SALSAC is can be, if you're doing it yourself, very onerous, and it's a meaningful benefit. So being able to not have to introduce a load of complexity as a company and offer it as an employee benefit is very powerful. And if you as the accountant can be the conduit to that value,
yeah,
incurring costs yourselves, it's sort of a win-win, right? Because you're also saving time and energy.
Definitely.
Brilliant. Are there any questions from anybody on the call? Please feel free to use the chat functionality if there are. Alternatively, you'll have seen popping up on screen at various points a call to action to connect with Husky. You can schedule time with them, and indeed we'll follow up after this with an email recording of this session, but also the option to reach out and to reach out to Brendan. Are there any sort of closing thoughts from either of you, either Brendan or Adam, that I think are sort of really relevant to the audience we've got here today, which is fellow accountants who are grappling with these issues and complexity?
Yeah, I think I'd probably say that a lot of accountants or the payroll bureaus saw us as a bit of a conflict of interest, or, potentially might steal their client, or, and it's funny, we kind of, one of our key messages, and I hope, I'll let Adam tell you what he thinks, but, is we are collegiate with payroll bureaus. We work with, a good number and a growing number, because those queries are through the roof about pensions. And I mean, we looked at the superannuation in Australia originally when we were building the software, and I mean, it's really clear as you start to build a pot of significant value, you start asking more and more questions of the person who does payroll, and it's just not, that is not what a payroller does. And so I think we sort of say, well, give us a client and, give us a shot. But I think they find very quickly how collegiate we are and how we are at the end of the phone as well, and how we kind of support the whole process. So I would hope that, that message would be clear, that's where we pretty much get 90% of our business SMEs from. They come from payroll bureau. And hopefully we've a very good relationship with those bureaus.
I agree. I mean, I wouldn't have been working with Husky for sort of the best part of 7 years, sort of had that service and value add to clients sort of not worked out at the end of the day. And that's how we've got sort of the numbers up to sort of in excess of 200. And I'd like to think that number will continue to grow. And with the changing pension sort of landscape, it may well be that sort of employers who aren't sort of signed up sort of with Husky at the moment, perhaps some of the sort of slightly larger ones with the 50, 100, 150 plus sort of employees may come to us to say, right, well, what else is there that we can do, that we can then have that additional sort of introductory sort of call with Husky to say, look, speak to these guys. These guys can help set up separate schemes. They can give you the understanding of costs involved. They can look after the audit and the compliance and the communications piece. So yeah, I think the future, as worrying as it looks for the world of pensions, I think with tech platforms such as Husky, with integrations and APIs with payroll softwares, it's looking from a bureau's point of view sort of a lot more positive, in the fact that we'll be a lot more sort of hands off with regards to having to get involved into the level of detail sort of the pension that we may have done previously, knowing that we've got the support of sort of Husky and others to sort of help with that side of things, as well as then the software providers ensuring that calculations and things are set up correctly and things do feed through sort of pretty seamlessly.
Very good. I think that's a wrap. Brendan, Adam, thank you both very much indeed for your time and sharing all of your insights. And thank you everybody for attending. You'll hear from us, if not today, certainly tomorrow, with some follow-up details, and do please reach out if you've any questions for either Brendan, Adam, or indeed ourselves. Thank you very much indeed.
Lovely.
Nice, Johnny. Appreciate
Thanks,
it.
Johnny.